Hey everyone, welcome to this edition of the Buddy Study Group. And this is shaping up to look like it may possibly be our last individual study group for the year. So if you're here and not already traveling for the holidays, thank you for being here. And we've appreciated your support throughout the entire year. But we're going to end things out for the year with an Ask Us Anything session. So with regard to anything long-term care, anything Buddy INS, if you have questions for Mark and I, we are here to answer them. So you can do that in the chat if you'd like, but you can also feel free to unmute and ask us. You can feel free to um, raise your hand and we can call on you and you can ask us a question. But if you're still thinking of your questions, I know we have questions for each other that will help with a good learning experience for everybody as well. So feel free to use the chat, raise your hand, unmute whatever you'd like, and ask us a question. But I think I'll start with one for you, Mark. You are somebody who is very plugged in to the InsurTech side of things, obviously being who we are as a kind of tech forward company. What do you think is the one piece of tech you've come across this year that has you most excited as it applies to long-term care or the insurance business in general?
Well, I'll answer this in terms of like insurance specific tech. I want to make an asterisk and note that, all of what we're seeing with communicating to clients through CRM, through Calendly, that's still going to be your bread and butter, right? Day in and day out. But we're seeing a lot of innovation in underwriting. And I think we're seeing those main challenges being addressed where we have the data, but with a human in the loop AI, it can kind of put that together to create a tool that gets you that information faster and better. So, PathWorks AI, which is one of the companies that's launched in the long-term care space, Excella, and I think we'll have some of them on our study groups in the future to just kind of demo their software. I think that's pretty exciting because, again, with underwriting being one of the biggest challenges, the ability to do that faster and more accurately, I just think that's going to keep getting better and better. So in the insured tech space, really the idea is how do we create like a modern e-commerce, consumer experience from the insurance products we offer. It doesn't take away the need to share your story. It doesn't take away the need for a relationship, but it does take away a lot of the friction of all these manual processes, right? And clients, I think, have a high expectation these days, right? That, you know, they have less mind share to spend going through like a 2 hour consultation, like you used to in the old days, spend so much time waiting for their policy. So I think the carriers that are ahead of the curve on that, incorporating this technology into their process are going to be the winners. And we're starting to see like seeds of that happening, like where the carriers aren't necessarily the first mover, but they're starting to see where success is happening in other parts of the insurance industry, and they're bringing those same tools over to the long-term care side. So that's what I'd expect to see next year. Some surprises on the horizon with carriers even building this process into their, enhancements to their current products.
I think that makes a lot of sense, and you and I were just having this conversation the other day, actually, is that outside of things that are required by regulators, there is no reason for the purchase of an insurance product to differ so extremely from the purchase of other products in the way our marketplace has just kind of moved forward in the last 20 plus years since the advent of the internet, right? The consumer experience as a whole for all products has really gotten a lot better and a lot frictionless, a lot more frictionless. And I think there's still so much meat on the bone left for insurance products in general and the purchase and even the education, right?
Mhm.
So I think that's a really good point.
And we're seeing growth, like there's proof is in the sales, right? If you look at products like a Banker's Life, which is kind of built the 1 day turnaround underwriting process, simplified underwriting, but they're using more instant decision types of tools to make those decisions quicker. Bright House is another one. So they may not be widely available from a distribution perspective, but you see how they're getting those policies approved so in such a short period of time, and you see their sales are growing as a result of that. I think that that really kind of is evidence, for the carriers that you got to go in that direction. And there's other
I
products like short-term care, like we were just talking about, which are doing the same thing, but off of like a simplified underwriting process versus the technology.
I agree, and I think those two things that you actually talked about, both tech pieces, they actually feed into each other. So, like you said, we have a lot of companies that are springing up kind of as a full-time job to really better the underwriting process as a whole, not just for agents, right? To be able to get quick answers and really get an understanding of a situation for their conversation before pre-qualifying or alongside pre-qualification. But I think these companies are also angling to provide a lot of lift for carriers, right? If you can make an underwriting tool that assists agents, you can certainly make an underwriting tool that assists the carriers who have all of the data and, by the way, the final say, right? So when I'm hearing from companies that are in this space, I'm not just hearing about how can I assist agents, but how can I assist carriers and case managers overall with managing hundreds and hundreds of pages of paperwork or really messy APSs that require a fine-tooth comb when, the landscape is anything but, right? So I think those same underwriting companies that are going to be assisting agents are going to create more of an e-commerce style of, um, purchase of insurance products just by way of the back end getting way more efficient over the next few years. We sometimes are maybe to a degree a bit unfair to some carriers who or product types that haven't had a lot of changes, but are really trying their best to innovate on the side of underwriting. And I think it's starting to show and prove how that can actually be more of a benefit than meets the eye for everyone, right? I think there's a lot of intangibles there just because we can't see what's going on behind the scenes. So I think that's a good answer, and I think I'm probably in the same realm as you as far as what tech I expect to bring. Kind of the biggest change just because it affects so much of the marketplace.
Yeah, I'll give another example too that's more like e-commerce experience that helps agents is taking the client through a journey. Like you have maybe education on your website, but if you give them the ability to step through that education, by the time they meet with you, they're much more well informed than having to kind of start from LTC 101 and build those layers of knowledge. And they're more confident in their decisions. So we're also working towards that, probably starting on the group side more, where we have a lot of traffic going to these, group enrollments with the guaranteed issue products. But we're already seeing evidence that, people are coming to us with different questions than they used to have,
Yeah,
right? Like
and
not why
we
am I
we've got
getting,
friends in that space too that are
yeah.
really trying to mix in education and pre-qualification as it were, right? So uh I think what we all need to remember is that, these companies and these concepts are still in the first at bat of the first inning of a nine-inning ball game, right? Iteration happens in all industries, you know, impossibly faster than we could have comprehended 10, 20 years ago. And insurance is going to be a benefactor of that as well. So, I mean, these companies are early in the game, and that means they have a lot of time to collect feedback, collect data, right, on the performance of their existing product and iterate on it, right? So, if you see a company that's out there now already doing a good job or even just a pretty good job, if they have the kind of strength and data and ability to iterate on feedback and data that they see, they're only going to get better and better. Anybody have a question for us yet? I've got more questions for Mark, and Mark may have a question or two for me.
I have a question.
Go for it, Elena.
Um, You guys recently did a nationwide new Care Matters annuity
Hmm.
presentation. I think Julie did it and I didn't get to make that session, but what is your take on it in terms of the leverage that you're seeing? And is the underwriting, which I know is simplified, is it similar and competitive as, say, One America, maybe Global Atlantic, like the other annuity carriers in that same product space?
So I think there's even some folks on the call who can help with this answer, but from what I'm seeing and from what I've heard from Nationwide and people working with the product is that this product is I guess this product looked up to the way Forcare ran as an annuity product and the way they did their underwriting in particular, right?
Okay.
So, underwriting for a two times or three times
Right.
long-term care leverage. And let me just pull up the actual page that we have for the Care Matters annuity to give you an idea of how the underwriting runs there. I
Okay.
think this may not, you know, be of massive value to you, but what I see in this product entering the market is for Nationwide specifically, having somewhere to shop Care Matters or Care Matters Together declines is a
Yeah.
huge thing for Nationwide, a company that many people trust. So the ability to kind of save a case rather than have to go
Gotcha.
somewhere else immediately, if you like the value and you like the way the product works, is a big thing for Nationwide and for agents. But as far as the underwriting, let me just share how that
Yeah,
works.
I think if
So,
you were to get declined for, say, with One America, when you get declined for, say, an asset-based hybrid
yep.
product, the underwriter come back and will offer you, you will qualify for annuity care too, with limited COB as an example. So is Nationwide following that same kind of footprint?
They started that way,
Okay.
and now they're just kind of waiting to get their feet solid underneath them with what states they have to work with. So it's very new, and filings are
Yeah.
still kind of running their course and being approved. But once they kind of get that rounded out list, they said sometime early on in the year, they are going to move to a style just like One America, where if you have a decline for Care Matters or Together, they will follow up immediately with an offer for Care Matters annuity. Um,
Awesome. Cool.
so you can kind of see the four care in here: six health questions, SI
Yeah.
underwriting, two yes answers is preferred. That's going to be like that three times
Mm-hmm.
qualification. Four yes answers is going to be that standard rate, or two times five plus yes answers is a decline. But they also
Got
take
it.
RX reports and diagnosis codes from records into that. And I have it up here. Yeah, they're targeting about 95% approval. So I would say a pretty ambitious target.
Yeah.
But, as long as you feel that the product is responsibly priced, responsibly underwritten, and the processes are good there, we've seen with other products out there in the market, you can target a very high acceptance rate. You've got to make sure that some of the appropriate knobs and levers are pulled to counteract that.
Okay.
Anybody else
Cool.
have any thoughts just before we move to the next question on Care Matters annuity, if you've gotten some early experience with it?
I have a case right now in underwriting, but it's only in the day two. So next week I can give you some answers.
Yeah.
Okay. Yeah, and
Jason.
and and part of the product too, remember, Elena, is that it's a single premium product, right? So you're
Right.
getting all of your premium up front, which plays into it a bit. I'm sorry, I might have talked over somebody who was gonna chime in there.
That's all right, Jason. I actually work on the brokerage side of asset-based long-term care within the Simplicity Group, and as a marketer, and so I have a lot of experience with this. We've written probably a dozen cases with that product.
Okay.
And I would say that if you're doing a base-only product with One America, there's only 4 questions to their underwriting.
Hmm.
And if they're all no's, you're instantly approved. It's about the same. There's 5 questions with Nationwide versus 4 with One America. It's only when you get into the leverage part, like the COB part and the multiplication part, kind of what you were alluding to when it comes to the care leverage, where you're going to
Hmm.
have more underwriting. In our experience so far, is that the underwriting itself, to go over what Alina was kind of going to, I think I want to interpret what she was going to is about the underwriting program is just
Hmm.
about the
Mhm.
same, maybe a little bit better with Nationwide because they do have that goal to get 95%, through there. And you're right. I've already experienced one of the Care Matters together, or Care Matters single life that was not approved, and there isn't kind of that auto mechanism that One America has, where they automatically underwrite you for the annuity care, and then you get an
Mhm.
email saying you're not approved for the asset care, but you are approved for annuity care without blah
Right.
blah blah. They don't have that quite yet on the Nationwide side. So I've experienced what you just said, Jason, exactly. So, but I do think that the difference between indemnity versus reimbursement, even the partial indemnity with One America, is a big thing, especially with the Pension Protection Act, and the fact that we can distribute those non-qualified gains tax free for long-term care with One America, with Equitrust, and with Global Atlantic 4Care. And I believe that Nationwide's been added to that list as well to be able to have those gains distributed on or in the future at least. So, but yeah, the underwriting itself has been pretty similar if you have that experience with the annuity care. But we're seeing
Appreciate
Okay.
it on
that,
our
Dave.
side.
You mentioned, the base only annuity sale, and I think that program's different. I mean, it's still their annuity care product, but it's a base only sale. To me, that's more of a guaranteed issue product. If they do the knockouts, when I say guaranteed issue, it's they may not qualify for the regular annuity for the 6-year plan. They got more health history. I kind of look at that. Well, at least what I've been using it for is a go-to for people who are otherwise uninsurable for the asset-based plans and
Correct.
finding a home there because it's only really 4 knockouts. One of them can be yes, so they call it 4 knockouts. And when you have someone who's type 1 diabetes and One America Underwriting is saying minimum table 6, it assumes no complications. But type 1 diabetics usually have some complications throughout their life,
Hmm.
statistically. And so I've got a client who didn't want to take the risk of getting declined. So they're going to go the probably the One America base only.
Yeah.
Yeah.
Yeah,
And
there's 4 questions. I can actually type them in the box or send them to you, Jason, whatever you like. But there's only 4 questions with One American.
Yeah.
As long as you answer no to all of them, you're
Yep.
approved. There is no black and white, by the way, or there's no gray area to those 4 questions. I've had that experience. Mark's
Yeah.
laughing, so I think you probably heard about
I
that experience
questioned
too.
it
So,
like no PHI, no prescript
yeah.
check,
so
just like a guaranteed issue. I'm like, I
yeah,
like that product.
yeah. As long as you say no to all that, and suitability wise, by the way, just I'm not. This isn't a One America plug, Jason. I'm sorry,
No, you're
but
good.
suitability
You're good.
wise, you could even have. I even had a annuity that had a 8% surrender charge, but because we are getting that tax, there was so much gain in the contract that we were able to overcome that because of the gains in tax-free distributions. And
Right.
so the client said, "I don't care about the surrender charge. I want the 20% arbitrage that I want to get on the tax savings for distributions for long-term care." And so One America took it as long because we had a letter of explanation with it. So there's some opportunity there. But Elena, great question, and sorry, I'll shut up.
No, no, that was awesome, and I think you're saying a lot of things that everybody was thinking or wanted to know, Dave. So I thought that was great. And I agree, from a pure leverage perspective, can you go out elsewhere on the market and, find something similar or better than base only annuity care? Well, of course. But like I said, um, if you've got that PPA potential with your case, even One America kind of finds ways to communicate this to you in their marketing, but that potential tax savings, you've got to think about that as some leverage. And you put it perfectly, Dave. It's kind of like using that arbitrage and counting that as your leverage. I thought that was a really good way to put it. And Dave, do you have a question as well? I know you had your hand raised.
No, sir. I just didn't want to interrupt you
Oh,
and unmute myself while you were talking earlier. So I put my hand up just so I could remind myself that I'd like to add some color. So
well,
my
I,
apologies.
I appreciate that. Very polite.
Yeah,
Appreciate that.
and we sometimes we forget it's a relatively new One America change, right, as of last year.
Yeah.
And again, follow where the sales are happening. They had a huge amount of sales, when they did that, and obviously it's continuing to this day to be really competitive. Nationwide might be trying to catch up to that because they probably
Mhm.
filed this while One America was making that change. So everyone's trying to like leapfrog each other, right?
Yeah.
Well,
Without
the
And if
doing
index
I,
annuity care is paying 275 right now in the fixed account. So go into the index annuity care, put it in that fixed account 100%, and now you've got guaranteed all the way through. So
yeah, if I were a betting man, I would say more carriers um, will start to offer an annuity product, especially if they're part of a greater company that's already offering annuity products, or they're offering, say, an ADL doubler. Um, if I wouldn't bet on those carriers adding a 7702B product, that's what I would tell them to do, personally. So we'll get Peggy's question, and then Diane, did you have something to add, or did you have a
Yeah, I
question?
wanted to follow up on Elena's question because
Yeah,
I
go for
did
it.
attend. Yeah, I did attend that Care Matters annuity training, or whatever it was. And one thing they did say was they're waiting for in January, they're going to have a whole bunch of other states approved. And that's when they're going to start doing the auto, hey, you didn't qualify for Care Matters 2. You can get, they're not doing it yet because they don't have the number of states that they wanted to be able to do that. But
Yep.
it will be auto, they said, pretty soon. And we did go through Alan at Nationwide, and he did approve an 8% surrender charge from a different annuity because of the tax-free benefits. So if you ask, you can get what you want.
Yeah, love that. And yeah, I think as soon as they get their feet underneath them, they'll start doing things exactly like One America very,
Mhm.
very soon. Because how often is it that you get an underwriter to be able to make a guaranteed follow-up proposal, potential sale off the back of a decline, right? So I think the incentives are just there.
Mhm.
So Peggy asked, any carriers other than One America that will consider someone taking antipsychotic medication? And I believe just off the top of my head, I know there's at least so I gotta unpack this a little bit because context matters here. Um, are they taking antipsychotic medication for antipsychotic purposes, or is it for an off-label purpose? Would be the question I would ask.
Well, she's had depression for 20 years. So
Okay.
she's been on Prozac and um, Wellbutrin, and then they just have started her on what is considered a antipsychotic.
Okay.
I mean, she's only 57, works full time. You know, I didn't dive so much into the past history because I kind of stopped there going, gosh, let me see if I can.
Yeah. So I think for any of the carriers that might consider her, they're gonna, want to know a few things like any med changes. They're gonna want to know if she's missed work or has been
Well, she
hospitalized.
has not been hospitalized. She hasn't
Perfect.
missed work for anything. And because this was actually a very new addition to her medications, I knew there was going to be a time frame where it was going to be a postpone. I just don't know how many. I've gone to One America for pre-qualification. They said they'll consider her, but I've got to go back and say, oh, but she just has started taking it, so that might make a difference.
Yeah. So let's see. Does anybody have experience with those specific medications? Has
Not
anybody ever?
not the specific medication, but I guess for an asset-based plan, you'd inquire, I would inquire, but I was thinking more on the guaranteed issue side. If if the client didn't qualify for, say, like a Nationwide Care Matters or One America Asset Care, there's Equitrust, right? As
Right.
long as that client can stand up and sit down in the chair during their PHI and answer some questions and a basic cognitive, they're good to go. That's a guaranteed issue product.
Yep. 100%
So
there.
Yeah.
Yeah, Diane,
It's
what do
just
you
how
have?
much leverage can you get them compared to an asset-based long-term care annuity? If
Yeah.
they
Is
can
that
qualify
a
there, that'd
single,
be ideal.
is that a single premium product,
It,
It
Equitrust?
is.
Bright
Yes.
House is another one to look at, Peggy.
Yeah, that's what I was going to say. I got someone approved with a bipolar disorder through Bright House, and I can't remember what medication she's taking, but it's been stable for years and she hasn't had the changes in medication. But she did get approved with bipolar, so I was really surprised that she got approved.
Okay.
yep.
And
Um,
she did a 3-year paid up.
Yeah, now they have a 10 pay as well on the
Hmm.
Bright House and a 3% inflation.
yeah, and I want to check quickly. I'm looking at Aetna's uninsurable drug list right now because Um, not that this is the case for you, but they are, in my experience and what I've seen in their documentation, they've been willing to take some medications that other have not. So it looks like if taking Prozac, it looks like we,
Caplyta is the antipsychotic.
what was it?
Caplyta, Caplyta.
CAPLYTA. Let's see if we got that on the list. I don't see it on their uninsurable drug list, but that's not to say that there couldn't be a generic that I that they don't have listed as, say, a brand name in here.
Oh,
Um,
one thing I did too, Jason, just to kind of highlight this in the buddy system, is if you go to the individual side, we have this AI advisor, and we don't necessarily update it as regularly as some of the other tools that we have. But I just literally just copied and pasted your question into it just to get directional advice. And the first two things, Aetna, Bright House, came up. Again, it's going to list some things maybe that are not, like Mutual Omaha, Securian probably won't,
They
but at
said
least it'll
no.
give you some ideas. And then I even asked about Caplyta, and it told me what Caplyta was. I was like, oh, that's pretty smart. Um,
Wow.
yeah. So just, this is a good way if you're like stuck, you just want inspiration. Not a bad idea to just, try this out.
yep,
Perfect. Yeah. Yeah.
agreed. So I don't see Caplyta. I did see that Prozac looks okay for recovery care, not home care plus. And one of the things with Aetna and just like one of the general kind of underwriting tips to impart on everyone is Aetna will take certain prescriptions if used for off-label purposes that I think can help people save cases if you have Aetna available in your state. So, for example, I just had the weird experience when I was actually selling that I had two clients decline for Seroquel, which is a antipsychotic, but it's also commonly prescribed as a sleep aid. And Aetna would actually take those folks because it's used as an off-label reason. So that's one of the things I've kind of come to know Aetna for underwriting sweet spots, I guess, besides like insulin-dependent diabetes and no height weight guidelines. So I think Aetna's been old reliable for many, but if you don't use it that often, I would definitely check out the Underwriting Buddy tool and just get an idea of what their sweet spots are because they can present some pretty good scenarios for clients who are in health challenges.
Perfect. Thank you.
Good question. Thanks for bringing a case study. I love running through case studies. I think they make us all better. Anybody have a question for us
I
or
know
for the
Romy
audience?
was asking a question at the beginning about, or kind of sharing what he learned about Manhattan Life. And again, kind of like Aetna, right? Manhattan Life is going to be more liberal on underwriting, but Romy, you were saying there's a home care only option or product. Um,
Yeah, I think he just hopped on the phone, but I can cover for him. It was essentially he had somebody with who he felt had some underwriting challenges and felt like they could access quite a bit on Aetna's standalone or Manhattan Life standalone home care for what seemed like an unreasonably good premium, right? And the question really became, how can they do that? And when we had Darcy on the study group call, there was even Linda had shown up and really had asked the same thing almost out of exasperation to Darcy, like, how are we actually able to secure these benefits for people at such affordable premiums? And um, it's a good, fair, you know, honest question. And I think there are a couple of lines that you will always get from short-term care carriers that say, well, number one, we have excellent predictability of the maximum amount of benefit we'll give out to somebody because we're limiting their coverage to 1 year, or maybe 1 year with simple inflation protection and 5 years of benefit vesting, right? To make sure we're not getting, for lack of a better word, hosed on, um, claims that happen in the first year, right? And if you want to access a second year through the restoration rider, you got to recover from whatever you're dealing with and are on claim for 180 days, which is 6 months. You got to spend 6 months recovered from whatever condition it may be to access any restoration. So I think that's, a lot of that is the answer that you'll get from the carrier, but it is totally okay to hear those things and say, well, I think there's still a little too much at play. Oh, hey, Romeo. Yeah, go ahead.
I just did the math, and the Manhattan product, which were a 72 to 73-year-old, was $66 a month, and it gave $120 a day for just home care, not a nurse or anything else, just plain home care. Well, that's $43,000 a year. I could sign up somebody who's frail, but they can do their ADLs. They don't need care today, but next month they're going to have home care coming in. They pay $66 a month times 12 months, and they get $43 out of it. That doesn't make economic sense to me.
You're on mute, Mark.
It's the same thing that you brought up with True Freedom earlier, right? If they're going to monitor, the agents, right, in terms of do they want to do business with the agent if you're having more than a couple of claims, and they are still a health-based product, so there is that potential for rate increases, and I think it's rational to assume that that can happen down the road given how they're underwriting it. So again, I don't know that they're going to have one claim is going to sink the ship, even if they have to pay $42,000 the full amount out. But yeah, certainly if they're seeing a couple of those claims developing, they're going to probably react to that. Maybe they're not seeing that though because of how it's being sold today. It's not, the same way that you were describing it.
Yeah. And I have it on my list to actually follow up with Linda, because once she kind of gets that thought and expresses those thoughts to the carrier, and the carrier says, well, why don't we have a conversation with product or actuarial so we can kind of allay some concerns? I know she's going to stop at nothing until she gets those answers. I know she's also been very, very busy over the last week or two, but I know she will come back with some nugget of information that we will either find helpful or will leave us feeling the same way, right? And then at that point, at the end of the day, it's, we have a choice to make. And obviously we want to help clients in any way possible, but we also got to remember we have incentives, like you were saying, Romeo, to be good partners to the carriers to make sure we still have avenues to help clients, right? And it's a fine tightrope to walk, and sometimes, or at least it can feel that way, right? So it's just about gathering as much information as we can, and picking our battles and understanding when to really hit the button and when to stay away, right? Because this is a market that you have spent a lot of your career serving, and you see what happens to the most lenient carriers if there aren't good counterbalance methods, right, to being able to offer to a health challenged market.
32 years doing nothing but long-term care.
So I have a question for you. Like, given that you work in a market that honestly, I think it's difficult to serve, and it's getting easier and easier with a lot more of the new products that we're seeing come out. But how do you strike that balance? How do you really do that examination of carrier and how do you feel about the market and the way it's changed, being able to serve more of the clients that you normally serve?
I
You
think it's
know,
wonderful with that. My business is 100% referral, but I have to really watch, especially with True Freedom, that I'm going to make certain that they do not appear to be going to be needing care within 2 years time period. Because they told me that if they have cases that need care even in the second year of owning it, that's going to be a serious detriment to their business model. So I'm being very, very careful about that. As far as the Aetna product, I do a lot of that, and that seems to work out fine. Um, it all makes sense. People are buying in advance because there is underwriting, and I just try to be a careful underwriter. I don't want to hurt somebody.
right, right. So I think it's just from your point of view, honesty, transparency, and protecting everybody that's involved as part of the sale, right? You work with people who really need to be protected, right? Because they're on a budget and they do have health challenges in many cases. But at the end of the day, the the carrier needs to be open for you to be able to have ways to serve the client. So I appreciate that bit of color.
If nothing else, there's always the irrevocable burial trust for the person, at least protect their burial money so their kids don't have to go to the payday loan store.
Right, right. It's good. Anybody else have any other questions? You can ask it on anything you want as it relates to long-term care and Buddy INS. We've had some really good questions so far. So if there's something you're dying to know, don't be afraid to speak up and ask. Mark, you got any questions for me? What have you always
Yeah.
wanted to ask?
Well, I have some general questions, maybe not what I've always wanted to ask, but I'll put you on the spot.
Okay.
But we talked a lot about alternative products today. In terms of all of the, I'll call it more traditional life, extension rider hybrids, what's got you excited about 2026 and, what do you think is going to increase in sales?
Yeah, I still think it's annuity long-term care. I think the companies who don't have a 7702B annuity long-term care product are absolutely 100% missing out. Not just for the ability for brokers who work heavily in annuities to be able to maybe repurpose an annuity that is not needed for a certain goal anymore, or just needs a new home, needs a new refresh, needs a new goal. But also these companies are selling annuities day in and day out, and they need to set themselves up for a healthy and marketable repurposing of some of those assets, lest they just kind of, sit there, right?
Yeah.
So I think that's a huge opportunity. I still think short-term care and just limited benefit period products, there's a lot more meat on the bone there. There's a lot more room for competition there. I still believe as long as you've got responsible actuarial working with responsible product team, there is room to serve the underserved market, which, by the way, uh, if that leap had been taken by companies 5 years ago, it felt like blue ocean, like there really was nobody serving that market. I'm excited to potentially see more creative marketplaces like that developing in ways that work for everybody involved.
Yeah, and I think your comment is also supported by the data we're seeing. And I think there's a broader trend. More agents are offering annuities. I think those markets are growing.
Yep.
And if you're adding that as an additional sale for the agents that are already comfortable with annuities, that works well. Those can also be great referral partners for specialists in this group. We're seeing a lot of Medicare advisors doing things that are outside of Medicare because the Medicare market is kind of disrupted right now, right? Carriers are pulling out. There's a lot of negativity happening there. So guess what? And now that, AEP is over, what do I want to offer? And guess who my clients are? They're senior market clients who have these needs. And I always think of annuity long-term care also, that 65 plus market tends to benefit the most with the leverage and the underwriting. So to me, that all comes together for growth. But Romeo, you have something to add there?
Yeah, I spent some time many years ago with the BGA trying to train Medicare supplement agents to sell long-term care insurance. Utter and complete failure. With Medicare supplement, okay, you're 65 or whatever your age is, and Medicare does this, and you need this to make it up, and everyone buys one sign here. You try that with long-term care, you're not getting anywhere.
Yep.
Sure. That's a good point. And you know why it happened back then is it used to be the average age of the buyer for long-term care was in the early 70s, right? That was before it came down right to the mid 50s now. But there is going to be a class of Medicare agent that I would say is more consultative, education focused that's out there, and I think those are the ones that do well. But to your point, if it's more transactional, Romeo, like how many people can
Yes,
I sign
but I
up?
am
Probably not going to
working.
work.
I
Yeah.
had lunch today with a 35-year-old gal who's been with me for 2 years learning long-term care. She does Medicare supplement. I left her alone during the season, but it's in my will that she gets this, the computers, everything when I go. And as long as, even if I retire, I'll still be mentoring her and helping her because I want someone to continue doing the free work that we do. I mean, every facility
Right.
within 50 miles of Green Bay, Wisconsin, if somebody comes in and they don't know how they're going to pay, go see Romeo. He will not charge you. He will help you figure things out. If it's a Medicaid, he'll tell you how it works, burial trust sales. And then if the family is there, turn to the rest of the family and say, don't leave home without it. Don't let this happen to you. It works. It makes easy sales.
Yeah, and I think you make a lot of good points there. I just think the future of this market is going to continue to grow, but I think we also get a lot of Medicare supplement agents, hovering around the web of our community that I talk to here and there, who say, I really want to start taking long-term care more seriously. I want to get better at long-term care, or I people tell me that long-term care is a great avenue for me because I do Medicare supplement, and I want to say whatever anybody has told you about that, do it in reverse because I think you should work with folks on long-term care far before they are eligible for Medicare and turn it into a nice, warm referral source or source that you can track in your CRM for when they age into Medicare to help them with that decision too, because you're dealing with a lot less high pressure underwriting and you're kind of getting the difficult and very referable sale done first. And then when they age into Medicare, you're like, remember long-term care? This is going to be a piece of cake compared to when we signed you up for your long-term care policy, right? So I think it just both sales are unbelievably referable. I think Medicare is the most referable sale, but if you can get folks kind of into your umbrella, at a younger age, there's a lot of benefit to your business. And of course, Medicare sales are very, very referable in their own right. So you'll be referred to people who are close to Medicare age as well. So I think it's just a way to kind of be able to handle kind of both ends of the spectrum, work with some younger people on long-term care, help them with Medicare down the line. And those Medicare folks, guess what? They're probably retiring, close to retiring, or have already retired, and they may be looking for other financial services as well. So I think just two great businesses to be in. And I think the rise of annuity long-term care, the rise of short-term care is going to help you more and more if you're involved in these two markets.
I
Howard,
get so many referrals from the Medicare supplement agents that I don't dare dabble in that. I don't know how to cut off my nose to spite my face.
Sure. I hear you.
Howard,
Yeah, Howard?
yeah. Well, I'm a Medicare agent who's I'm a big believer in long-term care. I'm also a former ambulance attendant and driver, and still am an EMT after 42 years at the age of
Hmm.
80.
Wow.
I had a patient on my gurney who was in his mid-20s, had been in a motorcycle accident. And if you can imagine having taken scoops out of each side of your head where your brain used to be, that's what he looked like. He was a long-term care situation, being cared
Yeah.
for by his parents. Now, I think at that point, now, I I I think that premium-based long-term care has probably gone by the wayside. Is that correct? For the most part?
I wouldn't say that. I would say that it's got fantastic fits in the market still. I
Who
think
offers it still? Because I think most companies have pulled out.
that's that is there is a problem of availability when you put it right next to the hybrid long-term care market, the asset-based market, so to speak. There are carriers still entering and trying to compete because they see a large market share potential, and there's still room to differentiate. I think traditional carriers, right, we don't see carriers entering at that pace, but traditional long-term care still has fantastic merits, and look no further than the partnership program as one of the biggest, I think, most underutilized benefits of traditional long-term care. That dollar for dollar asset protection is huge for the middle market, and the just affordable ongoing premium again is a really good selling point for especially younger clients who maybe haven't aged into short-term care yet. Um, there, there's still really cost-effective inflation protection. There's a lot to like. I think we just need to really evaluate some of the biggest values of traditional long-term
Mhm.
care, full
I think,
deductibility as
yeah,
well.
just to
Okay.
answer your question, Howard, it's Mutual Omaha, National Guardian Life, Thrivent, right? Those are the three brokerage carriers
Yep.
that
I see. Okay.
still very much behind their product. National Guardian Life will be launching a new version of their product coming up in the next couple of months. So
Mhm.
it's still out there. Obviously, with fewer carriers, you have fewer sales and awareness, but by no means is
Okay.
long-term care.
I wasn't aware that either of those were a part of the partnership program that Bankers is, but I don't think he's not. That's not available.
Yeah, all of those
Um,
carriers I mentioned have partnership. Depends on the state, but most states have partnership.
I see. Okay.
Yep.
And the second is, how do I hook up with you? I've been listening to you now for a while, and I'm now recovered from throat cancer enough to where I can begin my business again. So how do I get hooked up with you and have a conversation offline?
This is
Well,
probably the best way, actually, Howard, is just to show up to the meetings and participate. For the most part, we're facilitating joint work, helping specialists connect with referral partners on the individual markets, but also, those tools that we have in that buddy system portal. That's the best way to take advantage of, what we're building.
yep, and congratulations, by the way, um, on winning that fight.
You say
Uh,
Buddy System Portal. Um, is that buddysystem.com? How do I get there?
yeah, so the link I put in the chat, buddyins.com/partner, will give you essentially a link to do a 30-day free trial of the Buddy system. So that is a great avenue to start to kind of see all that we're up to and product information and different sales tools that we have. So I think that's a great place to get started. On that same page, there's also a submit referral button. So if you're somebody who feels like, I've been a little bit away from the market, I'm interested in maybe joint work just to see what's out there and learn from somebody, you can work with a one of a group of specialists that work very closely with us on cases as well. So there's a couple of ways to get yourself back reacquainted, and it's kind of, do I do self-service? Do I do joint work with somebody who's doing this for 99% of their day, or a little bit of both? So I think that page will really help you out.
Well, do you function as an FMO?
Generally speaking, most of the people in this group have FMOs that they work through, but we do if you don't have access to the products. We're just not here to recruit you away from your FMO.
Oh,
Hmm.
I see. Okay. All right. I thought maybe you're an FMO that specialized in LCC. All right.
Mostly on the group side. That's where most
Yep.
people don't have contracts or access or, the enrollment platforms. So we spend most of our time on those enrollments.
I see.
Yep.
Okay. Thank you very much.
Of
Yeah.
I'll keep
course.
listening.
Quick note for Howard.
Uh,
This is Alana.
oop,
Go for
Um,
it.
sorry,
I,
let
I
me
was just gonna,
mute
you asked
Alana here.
about the,
So I
Oh,
put a link in the chat.
I think Elena was
Oh, I'm sorry.
responding
I
to
thought she was on another line. My
was
fault.
I think you were replying to Howard.
Elon, if you were replying, I apologize for muting you. I just thought you had a call come in.
Maybe
Okay.
she did, and maybe you're actually
No,
dead
no,
on.
I heard her say she wanted to respond, so
Oh,
My
please
fault.
allow her to do so.
Yeah.
There we go. Okay.
There we
sorry
go.
about
Sorry
that.
Now
about
I
that.
now I can talk. Anyway, I was going to say on the traditional market, um, you guys said it well. It's still a viable option, and I look at all the time for specific situations. And one of those examples would be National Guardian Life. They will guarantee if someone can come up with a single premium, and I think they might be more competitive going forward because the new product's going to have a 5% discount, couples discount on the new product. So take a peek at that. If you do have a single premium opportunity, their 10 pay used to have the guarantee on it. I don't know if the new product is going to maintain that guarantee. No further premiums due. So they're kind of an outlier in the traditional space because they're offering a guarantee.
Hmm.
And I think it could fit for certain clients for sure. And in terms of educating clients, in terms of yes, their traditional premiums are going to go up, and all everyone knows is the 45%, 85% increases. But I think those days are kind of the past with all the new policy forms and the regulation that's been around it and all the requirements that the traditional carriers had to go through over the years. I think everyone's learned their lessons. So I don't see those pricing increases being significant going forward. So I'm a big believer in traditional. I have one myself and I'm perfectly fine with it. I'm okay if I get an increase. I can afford a 10, 20% increase. And based on my longevity and my family, I'm better off with the traditional because we don't have that longevity that with some, families living into their 90s, and that's not my family.
Yeah, love it. Good
Yeah.
answer. And for those of you who haven't seen it, want to kind of continue the conversation like this was kind of open forum, but if you want to get an idea of what we are thinking about or what we felt about this past year and what we are thinking about next year, kind of maybe what we got right and wrong from this year and what we're going to predict for next year, with regard to sales tools, with regard to product, with regard to individual, with regard to group. You can get a lot more of this conversation on our 2025-2026 market review. So that is a link to register. If you join us on the Thursday study groups already, nothing else you have to do but show up and realize that a lot more of your friends are going to be there this time. But if you are, you can share this link with anybody who you think would benefit from learning a little bit about the long-term care conversation this year and next year. So make sure to spread that around. And we had Brandon jump on. Let's see. Do you think CA will implement the LTCI payroll tax, or is it in a permanent hold? Ah, yes, it's
Yeah.
Schrodinger's payroll tax, right? It is and isn't happening. Always.
Yeah, no, I would say, Brandon, that nobody knows for sure, but they disbanded the task force that recommended the payroll tax. So that doesn't bode well. Usually legislation tends to happen the first couple of months of the year. We'll kind of see if a draft pops up. But right now, I'm not hearing any noise about it. So we're probably talking about it less this year than we have in the past couple of years because there just doesn't seem any momentum. Now, there are some other states that have launched, their own studies. So we're hearing from state to state some updates, but nothing on the payroll tax like legislation front, more about task force and studies, which tend to not necessarily have immediate momentum. But great question.
Yeah, so if there are no other questions, I think this is a good place to wrap it since we're
I
getting
have
close.
one more thing.
Yeah,
Sorry.
yeah, go for it.
I put a link a little bit up above. If you guys know Medicarians, we were talking about Medicare earlier, so it reminded me of this. The Buddy team oftentimes goes to that conference in the spring. That same company that has the Medicarian conference is starting a new conference called Protectors, and you might hear about it if you're a part of NAIFA because they partner with NAIFA as well, which will be in November of 26. And usually they have kind of sponsored agent programs where it doesn't cost anything maybe to attend. So definitely check it out if you want to get more involved in networking. It's very likely we'll be at that conference as well. So I know it's a little bit in advance here, but mark your calendars for November if you're interested. It's in Las Vegas.
Fantastic team. behind Medicarians and the Protectors. Extremely, extremely well-run conference. And I assure you, if you like networking with like-minded individuals, they make it super, super easy to do it. So I can vouch for it too, and would say definitely consider that on your list for travel. I think that's great and good spot to wrap it. We really appreciate the support this year and every year. Thanks for coming up and just agreeing to pick our brains. I thought it was all great conversations, super good questions. We'll touch on a lot more on the market review January 8th. But yeah, we just appreciate so much that we get to show up and talk to, with, and ask things of all of our friends, and really happy to have a community that not only shows up but looks out for each other. So really appreciate y'all. Looking forward to another year next year of making each other better every day. And we will talk to you soon. Be well. Have a happy holiday if we don't talk to you before then. Bye, guys.
Happy holidays.
You too.